Hello, good morning, afternoon, or evening, depending where you're listening to this, and welcome to Tax in the Spotlight, the Saffery Sports and Entertainment podcast. I'm Pete Hackleton, a partner and head of the sports and entertainment team at Saffery, and today I'm joined by two guests, Tracey and Nick Hall, who are both directors in our Manchester office and advise many of our sports clients in the Northwest. As we approach the summer, the 2026 World Cup and transfer window are both around the corner, so we thought it'd be an appropriate time to look at the potential international tax issues footballers face and the key areas that need to be considered, alongside how we help our clients on these issues. So, Ross, Nick, good to see you both. Thank you for joining me.
Right. Cheers, Pete. Good to see you.
I think the best place to start the conversation is to look at players transferring to the UK or moving away over the summer and what tax complexities can arise. So, Ross, maybe you can start us off by outlining what players and their agents really need to think about before they move.
Yeah, I mean, player transfers are just one of the biggest tax trigger points we see, aren't they? And it's often the point where early advice makes a big difference. Tax is often one of the last things on everyone's mind at that point. Players are focused on football or where they're going to live, and the agents and clubs are focused on contracts and completion deadlines. And what we often see in practice is tax being one of the final considerations when it really should be much higher up on the list. So if players transferring to the UK, one of the starting points from a tax perspective is assessing their resident status, because that usually drives the tax position in the UK. In most cases, the player will be living and working full-time in the UK, so they'll be UK resident, and that means they'll be subject to UK tax on their worldwide income and capital gains. But it's when their UK residence starts or ends, which is a key question, because that will establish when their income and gains, not just salary from the club, will be subject to UK tax. And we work out their resident status by looking at quite a mechanical series of tests. Goes beyond the scope of this podcast, but you need to look at things like your days spent in the country in the tax year, work days, accommodation, family ties, all of that kind of stuff. And what we find in practice is the timing of a move and contract start dates have a huge impact on residents and therefore on the wider UK tax position. Obviously, the transfer windows and the tax years aren't aligned, so players will generally transfer partway through a tax year. So you'll get what's called split year treatment, which splits the tax year into two parts, a UK resident and a non-UK resident part. So you've got two very different tax treatments in the same tax year. So lots of things to watch out for. And then throw in, the added complication of unaligned tax years. So players coming from a European country, like Spain, France, for example, have a January to December tax year, and we have April to April. And then the football season doesn't align with any of those either. So there's lots of moving parts and timing issues to work through there. So it can get quite messy in a transfer year, and the player might acquire UK residence, but also remain tax resident in the other country. So it can end up with income taxable in more than one country. And we then need to look at double tax treaties and try and work out which country gets taxing rights over certain sources of income. And it's really important to consider the impact that a transfer has on the change of residence and their other income. So alongside the playing contract, you've got all the commercial arrangements, boot deals, sponsorship, social media income, any other weird and wonderful income streams that players can have. And they can often be set up for different jurisdictions. So when a player comes to the UK, we need to be asking things like, are any existing commercial contracts structured correctly for UK tax? Should they sit with the individual or in an image rights company or some other structure? Should any commercial deals running through an overseas image rights company be assigned to a UK company? Are there overseas withholding taxes to think about? All of those kind of things. And in practice, players and agents will often know what they're earning commercially, but not necessarily where the tax liability sits. Or in some cases, they might think, well, we're paying tax on this deal in Brazil, for example, so there's no need to declare that income in the UK, which isn't quite right. So often there's an education piece around there as well.
Thanks, Ross. If I just jump in there, because I know you're going to talk about players leaving the UK as well, but just on the players arriving, as I was listening, it just occurred to me, we obviously have lots of good relationships with advisors in different countries, particularly the popular ones, Spain, Italy, France, Germany. And I think that interaction between the two positions, a client leaving one country and coming to the other country and working with those advisors is really important.
Yeah, absolutely. You've got to be joined up with the other advisors and have oversight on both sides of the fence. So we can tackle the UK side. And as you say, Pete, we work really closely with tax advisors in most other countries, so we can be joined up in that respect. But so it is worth considering how it works going the other way. So when players transfer from the UK to an overseas club, one common misconception is that once a player leaves the UK, that's the end of their UK tax story, which often it isn't. And leaving the Premier League doesn't always mean leaving HMRC, unfortunately. So if a player becomes non-resident, they can still have UK tax exposure on things like deferred bonuses, image rights income, or even UK property. They bought a property in the UK and are letting it out. So when a player leaves the UK, it's really important to do a full assessment of their ongoing exposure to UK tax, just to sort of avoid any nasty surprises further down the line. And then I think just finally on this bit then, there's practical issues, which are sometimes just as important as the larger technical ones. Incorrect PAYE tax codes when players first arrive in the UK is a common one, and that can lead to under or over payments of tax. And this affects players transferring within the UK, not just from overseas. Getting the level of tax right on benefits in kind, and in particular things like agents' fees, for example, is really important. And if it's not dealt with quickly or correctly, it can lead to unexpected liabilities in January. So yeah, I think just to recap on all of that, a change to a player's tax residence and a sort of a move to a new tax system can have significant tax implications. So early engagement with a tax advisor is really important.
Those things are all relevant for players moving from and to new countries, but there are also issues associated with loan moves. And I think, Nick, you're going to go on and speak about that when it's just a more short-term move to a different territory.
Yeah, exactly. I was just going to make that point that obviously players will go. A lot of the things you talk about there, Ross, are about permanent moves, which is generally going to be the most obvious situation that a player will come across. But we've had experience as well with loan moves or other similarly short-term deals that players might enter into. And it's really important for those players to consider the impacts that may or may not have on their tax residence. Players generally don't obviously understand the mechanics of things like this. And it's really important for them to be speaking to their advisors at the right time, along with the agent and them engaging with us early in that process. It is really easy to lose track of that and to think that you're leaving the UK when you actually may not do. Loans are the obvious one there because you might only go on loan, say, in January till the end of the season, and you're never actually going to stop being resident in the UK. But even on what might be first considered to be a permanent deal, I mean, the really famous example was when Jordan Henderson went to, I think it was Saudi he went to, wasn't he? And decided that the move wasn't for him and that he was looking at returning to the Premier League, but he hadn't been out of the UK long enough. So had he returned, he would have become taxable here on all the income that he thought was going to be tax-free. So quite famously went and joined Ajax instead. But those things can quickly trip players up. We've had a couple of cases where we've only found out too late after the fact when a player's gone on a deal and ended up coming back to the UK before we'd realised, and ended up with quite a bit of pain for additional taxes being paid in the UK that they weren't expecting.
Yeah, and that's a really good point, Nick, because we've had various questions at different windows, particularly in January, but more often in the summer when players have moved to, say, Saudi, and they're looking at coming back to the UK. And actually, the implications are that everything that they've earned tax-free would potentially be taxable in the UK. And that has an implication for the agent negotiating a deal in the UK. Maybe they're looking for a gross-up bonus to cover that tax. So lots of interesting things there. One other point that just occurred to me when Ross was mentioning about players leaving the UK but still having UK tax valid obligations. Just a link with one of the previous podcasts if you listen to that. Thanks, Mum. Making tax digital, rental income. If a player leaves the UK but they've got rental properties here in the UK, they're potentially still within making tax digital, and they might still have 5 UK filings a year. So really important to make sure that you've got all those things covered off. Just move on, I think, Nick, if it's worth highlighting the new foreign income and gains regime. It came into effect from the 6th of April 2025. Obviously, the first year it applied was the year ended 5th of April 26. So we'll shortly be preparing first tax returns for that year. How can the new FIG regime be beneficial for players moving to the UK for the first time?
Yeah, cheers, Pete. So yeah, it was obviously a very fundamental change to the way that newly arising UK residents are taxed on their income and gains. We previously had the concept of domicile, someone would either be UK domicile or non-UK domicile, which there was a lot of political talk around that. Essentially, that was pretty much always based on where you were born. And for non-domiciled individuals, they could choose to be taxed on what was called the remittance basis. So only on income that was brought into the UK. That had some planning opportunities around it, but that's now been done away with. And we now have this concept, the foreign incoming gains regime, which was colloquially referred to as the FIG regime. Similarly for newly arising UK residents, so that's those in their first 4 years of being a UK resident, they can elect for their foreign incoming gains to be non-taxable in the UK. So rather than having to be concerned with remittance basis, it's just a question of, was the income from a foreign source or the gain from a foreign source? So we don't need to concern ourselves with whether or not that's being brought into the UK anymore. And obviously this gives rise to some significant planning opportunities and is particularly important for players who are transferring into UK clubs. If you've got a player arriving into a Premier League team from Spain, Italy, France, wherever it is that they may be transferring in from, correctly structuring their holdings, even for something as simple as their banking and investment portfolios being held in an offshore banking structure rather than in the UK, can lead to some very significant tax savings there. And so it's clearly something, again, similar vein that we were talking to before, and it's always something that we talk about, is the importance of players and their agents engaging with us at the right time and talking to us before jumping in and doing something themselves. This new structure provides a lot of opportunities for getting those things right and making sure that you're structuring things in a way that's not going to lead to an unexpected tax charge. It's the other angle to that, from perhaps a bit of a downside, where we used to have the case that for newly arriving residents, if they were electing for the remittance basis and hadn't brought any income into the UK, the reporting requirements there were very low or almost non-existent. If there was nothing to bring in, nothing to report, it was very nice and easy. We've now got the situation where there may be a lot of tax benefits to having the foreign income and gains not being taxable here, but it does mean that we're going to have to collate all that information, and there's going to be a pretty significant reporting requirement. So the admin burden shouldn't be underestimated there, but obviously the headline is the tax position itself, which can be very beneficial.
Yeah, agree with all that, Nick. And it's just worth reiterating that foreign income and gains regime, it exempts any overseas income, but it's only exempt to the extent that we state it on the tax return and claim the exemption. So to the extent that, you've got some property in the Netherlands, it's not taxable. But if you don't put that on the tax return, HMRC later inquire and find that you've got that income. Not only is it taxable, penalties will apply, and you'd probably be too late to refile to claim the exemption. So really important that all of those income sources are stated and exempted, even though, as you say, it's likely to be more work. One other aspect of the FIG regime, Ross, perhaps move back to you for this one. Overseas Workday Relief. How does this work, and what benefits can players get from this?
Yeah, Overseas Workday Relief, it can be really valuable, and I mean less valuable since April 25 following some budget changes, but it shouldn't be overlooked. And for the right player, it's just a really sensible and efficient tax relief to claim. So in real simple terms then, the relief is designed for players and individuals generally who come to the UK but still spend part of their time working abroad. So if we think for footballers, it's not just match days, it can be pre-season tours, warm weather training camps, overseas rehab, and potentially international duty, but that can be a point of contention with HMRC. So the devil is in the detail with all of that. So normally once you're a UK resident, you're taxed on your worldwide income and capital gains, but Overseas Workday Relief effectively says for overseas players now living and working in the UK, if part of their job is performed outside the UK, that portion of their salary won't be taxed in the UK, subject of course to meeting all the conditions. And that can translate into significant savings. In terms of who actually qualifies, the key point is that this relief is really aimed at new arrivals to the UK. So under the current rules, you need to be UK resident and have been non-UK resident for a long period before arriving, broadly 10 years. And you can only claim for your first 4 years of UK tax residence. So it's a time-limited opportunity. You don't get it forever. And there's now a cap on how much you can claim, which is the lower of 30% of your employment income or £300,000 per year. So a potential tax saving for some of the elite players in the top clubs of up to £135,000 per year. So yeah, it's a really valuable relief. There are a few practical planning points to keep in mind. First of all, track your days properly. The whole calculation depends on how many days you work overseas versus in the UK. So record keeping is really important. Flight details, times of flights, details of the duties performed overseas, all that kind of stuff really matters. Secondly, think about timing when you move to the UK. that might not be an option for some players. The contract start date is a contract start date, but your first year and whether split year treatment applies can make a big difference to how much income qualifies under the relief. And then thirdly, understand what counts as an overseas workday. And in football, that's not always obvious. There's all kinds of rules around what qualifies as an overseas workday, things like type of duties that are performed overseas, how long you work for in a day, even things like the time of your flight, treatment of transit days, all of that comes into play. And for footballers, as I said before, there's a few points of contention around things like rehab days and international duty, which could be a discussion with HMRC. So it depends on how they are structured and the detail of those days. Yeah, to recap, it's a really valuable relief. It is just limited to 4 years. So the players transferring to the UK, it should be part of those early conversations with their tax advisor.
Yeah, absolutely, Ross. Thanks for that. And I think under the old rules, the complication always used to be that for the relevant portion, you had to pay the income outside of the UK because there was a remittance basis of tax. That element had to go outside the UK and not be brought in. So there was quite a lot of administrative hassle associated with it. Whereas now, the money can still be paid into the UK bank account because it relates to overseas duties. We can claim OWR. So there's no reason why a player coming to the UK shouldn't claim it. And as you said, the relief has now been restricted. 300,000 a year, 135,000, but over 4 tax years, that's potentially 540k. So there's some significant savings to be made by players over a number of years. Okay, just last one before we wrap up, I think. The World Cup starts on the 11th of June, and so we should talk about tournaments and earnings and how the tax side of this works. So, Nick, do you want to run through this?
Yeah, cheers, Pete. So there'll obviously be the question of whether there will be withholding tax applied to the payments that are being made to players. And then subsequently from that, whether there's relief available for those taxes that have been paid in other jurisdictions against the liabilities that the players have here in the UK. The key things to consider here will be federal versus state tax when considering the tax position in the US. So there's looks like FIFA have managed to secure an agreement with the US over an exemption from federal tax withholding, which has already been agreed with Canada and Mexico. And if indeed that has been secured with the US, will make much of this process easier for players in terms of the admin side of things. But the underlying question will be what withholding tax will be applied and whether or not relief is available for that in the UK when the players come back and have to calculate their UK income tax position. So in the US, there is federal tax and then there is state tax. So the states that the games are being held in the US may charge income tax at the state level. And similarly in Canada, that might be charged at the province level rather than at the federal level. The question then becomes whether there's relief for those taxes back in the UK. So the federal level taxes will be covered by the double tax treaties that the UK has with these other countries. But the state and province taxes in the US states or Canadian provinces, they're not covered by those treaties in the same way. So we'd have to look at what's called a unilateral claim for relief against those taxes. So that's tackled kind of state by state in the US as to whether or not relief for that income tax at the state level is relievable here in the UK. I had a quick look earlier of the cities that the games are being held in, and all of the states in the US that are holding a game, they either have relief available or they don't charge state income tax. I think there's 3 states there that don't charge state income tax, and then the others where an income tax will be withheld from the payments. The players should be able to claim relief for that back in the UK when they come to calculate their UK tax position. So obviously that's all applicable to the British players who are going to be representing either England or Scotland over in the World Cup. But there'll also be players who are Premier League players representing other countries. This will lead to some interesting interaction with the FIG regime that we discussed a few moments ago, and how those players might be able to claim for certain reliefs against tax in the UK for those earnings that have arisen overseas. But yeah, ultimately, to summarize everything there, we'll be looking at both federal level tax and then also state and province level tax, and whether relief is available there against those, which we believe in most instances it will be. And so players won't be paying tax twice on the same income.
Yeah, and it'll be interesting to see how the exemption is worded. So back in the distant past, in my Deloitte days, we worked on the London 2012 Olympics and the tax exemption for that. And there were specific exemptions which made clear it was any games related income. So if you had Usain Bolt coming over and doing a Puma commercial that related directly to the games, that would be exempted as well. I wonder whether somebody with a huge global brand like Cristiano Ronaldo going to the US, if there were some commercial activities, whether that would be covered by their exemption. So that's still to be decided. As you said, it's still not clear exactly what the exemption is. Just a quick one, Nick, before we wrap up, I think. And what about the overseas associations who will be receiving payments from FIFA? Are they covered?
Yeah, so I think similarly, the associations themselves have got exemptions from tax. Certainly in the US, they should be able to get relief from withholding in the same way. And I think, again, I think that's already been agreed in both Canada and Mexico. So it'll be the terms that are yet to be confirmed with the US that will be the final thing to confirm there.
Excellent. Thank you for that. Now, normally I'd try and throw in a final question to trip people up, but I think Nick and Ross are expecting me to ask them who's going to win the World Cup. So we do that first. Nick, who's going to win it this summer?
The favourites are looking like Spain and France, aren't they? Hopefully England can pull it off.
Coming home. Ross, what about you?
It's really hard to ignore the usual suspects here, isn't it? Like Nick said, Spain, France, Brazil. But I'm going to go out of sheer blind optimism and say England.
Love that from both of you. And then, so second question to throw in, then who's going to be tournament top scorer? Ross, we'll come to you first.
Well, on that basis, I've said England. I'm going to say Harry Kane.
Excellent. Yeah. Nick?
I'd love to agree. I think England's results are probably going to be a little bit tighter. I'm going to go with Mbappe.
Okay. Excellent choice as well. Thank you for that, guys. That's great. Ross, Nick, thank you for joining me. A very topical and timely conversation. As ever, I should point out that this is a complex area and you should always take professional advice on these matters, ideally from us. That's all for this episode of Tax in the Spotlight. Don't forget to subscribe, rate and review our show. And if you have any questions on today's topic or any other matter, or to find out more about us, please head to www.saffery.com and drop us a line. Thank you for listening.